Shopify Shop, the e-commerce rival to eBay and Amazon.com, benefited as retailers rapidly shifted to online sales during the coronavirus pandemic. Shopify earnings surged in the first quarter, sending Shop stock to a record high. But is Shopify stock a buy right now? The e-commerce platform provider helps individuals and small businesses set up shop online and build their brands. Privately held BigCommerce is a close competitor, but now Microsoft (MSFT) and Facebook (FB) have set their sights on digital and online sales. Shopify was started by snowboarding enthusiasts roughly a decade ago. In fact, it started as an online snowboard shop, moving into e-commerce software when the founders couldn't find what they were looking for, a platform to both sell goods and grow the brand. The Canadian software company helps more than 1 million merchants across 175 countries to sell, market and manage their products. In return, it earns subscription fees. It also offers shipping, digital payments and fulfillment. In 2019, subscriptions accounted for 41% of revenue and merchant solutions for 59%. Shopify stock technical analysis. Shop stock cleared a 593.99 buy point in strong volume April 20, according to MarketSmith analysis. On May 5, Shopify stock cleared a 665.84 alternate entry. Shopify stock is now extended from both entries after jumping May 6 on a big earnings beat Wednesday. The relative strength line is making new highs along with the stock, a positive sign. The RS line, which measures Shopify stock's performance against the S&P 500, is the blue line in the chart shown. In April, Shopify stock soared 52% as management said it won't be long before traffic has doubled or more. Shopify earns an IBD composite rating of 96 out of 99. The rating combines key fundamental and technical metrics in a single score. The software stock was a huge winner in 2019 and continues to outperform, giving it a near-perfect 98 rupees rating. Shares kept moving higher during last year's stock market pullbacks, an especially bullish sign given the massive run-up in price since 2017. The accumulation distribution rating of A reflects heavy buying by institutions in the past 13 weeks. Shop stock is well traded, with roughly 3.5 million shares bought and sold on average every day. Shopify stock debuted 5 years ago and has solid institutional backing. 1,179 funds own the stock as of March, up from 1,144 in December. Shop earnings and fundamentals. On key earnings and sales metrics, Shopify stock earns a poor EPS rating of 33 out of 99, and an SMR rating of C, on a scale of AE, with A the best. The EPS rating reflects a company's health on fundamental earnings, and its SMR rating measures sales growth, profit margins and return on equity. The EPS rating is low because the company doesn't have a long earnings history, and reported a surprise Q3 2019 loss. On May 6, the e-commerce software leader posted a surprise profit for the first quarter. Shopify earnings soared 217% to 19 cents a share. Revenue rose 47% to $470 million. The key metric of gross merchandise volume, or the value of all goods sold on the Shopify platform, jumped 46% to $17.4 billion, topping estimates of $16.83 billion. The sales surge cemented views that brick-and-mortar businesses are pivoting online, boosting Shopify stock. The company pulled 2020 guidance April 1 on coronavirus uncertainty. It did not update Wednesday, merely saying it is closely monitoring the situation. For all of 2020, analysts on average expected Shopify earnings per share to crumble 93% to 2 cents, but that was before the surprise Q1 profit. Sales are seen growing 29% to $2.04 billion for the year. Shopify is investing heavily to grow its fulfillment business. In 2021, Shopify earnings per share is seen up more than 2,000% to 44 cents, with revenue up 33% to $2.72 billion. But, with the coronavirus crisis, take all earnings estimates with a huge grain of salt. Over the past 3 years, Shopify grew earnings at a 54% annual rate and sales by 59%. It saw an adjusted annual profit for the first time in 2017. The hot software stock lags several peers with its 5.1% pre-tax profit margin, the IBD stock checkup tool shows. Its 2% return on equity is well under the minimum 17% or higher that investors would want to see. Coronavirus impact on Shopify. Discussing the coronavirus impact on its business Wednesday, Shopify signaled it's largely positive. While the pandemic has curbed global commerce and especially strained smaller businesses, it has sped up the shift to online shopping, according to the company. We are working as fast as we can to support our merchants by retooling our products to help them adapt to this new reality, CEO Toby Lutke said in the earnings release. Shopify added it's uniquely positioned to help businesses, enabling entrepreneurs to start online businesses. New initiatives include extended 90-day free trials for plan sign-ups. They also include local in-store or curbside pickup and delivery. More recently, Shopify launched Shop, a new mobile shopping app. The Shop app allows users to discover local businesses, get product recommendations from their favorite brands and track all of their online orders. But in March and April, Shopify saw more merchants downgrade to lower-priced plans than in the prior 2 months. Given coronavirus uncertainty, Shopify is watching how rising joblessness impacts both shop creation on its platform and consumer spending. Amazon, eBay rival? Shopify is seen as a growing challenger to the e-commerce dominance of Amazon. But Shopify is not itself a retailer, rather, it helps its mostly small and mid-size customers compete against larger businesses. They use Shopify's tools to build websites, list products and collect payments, all under their own domain name and brand. The company had several notable achievements in Q1. Among the highlights, it continued to develop the Shopify Fulfillment Network. The company is spending $1 billion over 5 years to build the fulfillment business. Shopify could break even on the effort by 2023, analysts say. Shopify enhanced fulfillment solutions from its 6 River Systems acquisition. That included upgrades to its mobile robot called Chuck. It grew Shopify Shipping, a service that allows merchants to print labels to fulfill online orders. In 2019, Shopify expanded Shopify Marketing, as Adobe ADBE beefs up its digital marketing business with acquisitions. It added 13 languages, including Chinese and Hindi, to the Shopify platform, taking the total to 20. Some 29% of its merchants are now from non-English-speaking markets. Analysts say Shopify could triple its market share to 9% within 5 years, eventually rivaling Amazon's first-party sales. Shopify is investing heavily both at home and overseas to build awareness about its brand. But Microsoft has launched its own e-commerce software tools for businesses. Longtime partner Facebook now also has a shopping feature for the photo-sharing app Instagram. Shop Stock Group. Shopify belongs to IBD's Computer Software Enterprise Group, which ranks No. 5 out of 197 industry groups. Shopify stock itself ranks No. 14 out of 69 stocks in this group. Paycom Software, ServiceNow, DocuSign and Zoom Video are other top stocks in this group. ServiceNow is on the IBD 50 list of top growth stocks. Is Shopify stock a buy right now? Shopify ticks off many of the boxes that investors should be looking for. Shop stock was a big winner in 2019 and again in the coronavirus market rally. Key acquisitions and expansions promise more runway for growth. This software company doesn't have a long earnings history and is poised for earnings pain in the near term, but it delivered a big Q1 surprise. Longer term, analysts are betting on big Shopify earnings growth. From a technical view, Shopify stock been acting bullishly in the coronavirus stock market. But Shop stock is extended, meaning shares are not in a proper buy zone. Investors could wait for Shopify to form a new base, or pull back to the 50-day line. Bottom line, Shopify stock is not a buy right now. But it's definitely one to watch.